Hello, welcome to Anointing FS. Gold traders, this week the market is very bullish. The market looks very bullish. Last week the market was bullish. Ending the week, we saw price testing a major supply zone and we're expecting more bearish move to the downside. But then that didn't happen because of where gold is actually coming from. On the daily time frame, we saw price rejecting from the daily time frame, and we are expecting gold to go higher more than last week. So join me in this video as I break down gold movement this week and what I expect gold to do this week based on the knowledge I have acquired in the forex market. Without wasting much time, let's go in. All right, so welcome to my screen. Now let's move to gold charts. So this is the gold chart. This is what we've had over the week. Let me change the theme to white background so we can see clearly. I mostly change to dark background in the night so to prevent the light rays getting to my eyes. So within the daytime, then I change to white background. Now my chart looks so much messed up with the charts because of teachings and stuff. So let's use this clean chart. Okay, so let me delete everything. Before then, anytime I have to check from the higher time frame to see where market is moving from and the potentials market has. Okay, so if we look at this movement, I don't want to. Okay, let's do it this way. The major movement gold did was to move price from this particular level to that level, and then let's check the Fibonacci retracement to which level before price started moving to the upside. So you pull your fib, start from this low to the high. Let me change this fib. I have 3 fibs. Okay, let me check all of them. Yes, okay, good. So this fib, that is the major one I mostly use. Okay, so you can see that price came to the 70% level, exactly at the 70% level, and then it started retracing. But then you ask yourself, what is inside the 70% level? Always your Fibonacci has to be in line with some other confluences. Okay, so let me delete the Fibonacci, or let me just mark a line there. This is where we had our 70% level. Okay, so for the 70% level, as price came there, you see there is a break of structure at this level that makes that 70% level a valid point. Okay, so it makes it a valid point because there's a break of structure, and then you ask yourself, what caused the break of structure? It is a demand zone. So you go in the daily to identify a clean candlestick. Okay, so in the daily or on the daily, you can find the bullish engulfing candlestick here. Okay, so you mark body to body, week to week. Initially there's a first touch and then there is the major touch. So most of the time when you have a zone on the higher time frame, price can visit that zone for 2 times, 3 times, but not on the 4th time. That is on the higher time frame. But on the lower time frame, you don't use that same level consecutively. So now understanding reason why gold is moving from this point. Now quickly let's run up to see where gold is heading towards, okay, for the next movement. But then last week we saw this bearish breakout here. Okay, we saw this bearish breakout here where we identified the supply zone that caused the breakout. So we marked this supply zone, and then we had price tapping into it and then started selling. Now on the 4 hour, okay, on the 4 hour, I think I shared this signal and then we made something out of it. Okay, so price tapped in and then started selling before eventually going to the upside. Upon finding this demand zone here, price made a move to the upside, and the same thing happened here again before eventually breaking out to the upside. Now you see, one interesting thing of my concept is that I use this hidden engulfing pattern. Okay, this hidden engulfing, let me delete this inside the zone. Okay, hidden engulfing. So as price breaks above the zone, price came to retest it in the midnight when market opened, and then it started rallying to the upside. But this move, I didn't take it. Okay, I didn't catch it at all. I didn't catch this move at all because I was away from the chart. So going into the next trade, or going into the next direction of the week, now I have to go back to the weekly to see the potentials key level that price may reverse from. Okay, so the same thing, I'll have to use my Fib to check. The move started from here, the high, and then the low at this particular wick. Okay, let me change one or two settings, the color, so that you guys can see it clearly. So let me change all the white to black, the 100%, and then the 0%. Okay, all right, so you can see price started from the 100% and got to the 0%, like this level before retracing. So now if you are using the Fib, what are the potential levels? You can see the 50%. Okay, and see the 50% here, and then our 70%. So first I'll have to mark the 50% the price is going to retrace from that level, and then these levels are far away, so I may just use another Fib. Okay, check all the Fibs I have. Third Fib. Okay, so the third Fib, I have the 61.8, 61.8, have the 61.8. So now let's check the next Fib. I'm looking for the closest one. Okay, let me check this one too. Golden zone, I still have my 50, 61, and then the 70%, but then let's ignore the rest because we have had two levels for the meantime. And these two levels, I'm going to adjust them. Okay, but before I adjust them, I'll look at what happens on the daily time frame. So quickly I switch to the daily, and then on the daily, this is in line with my key concept that I trade, that is the hidden engulfing. Okay, so with the hidden engulfing over here, I want to see price tap into it, make a rejection, price tap into it, make a rejection, a change of character before I sell. And if I'm selling, I'm just targeting this point. Okay, I'm just targeting this demand zone that caused price to mitigate this level. Okay, this demand zone actually caused the mitigation of this zone. Okay, because you can see the major movement coming from this level to that level and no other level. Okay, so I'm going to mark this demand zone on the daily time frame, and then it has to be refined. Okay, this demand zone has to be refined. If price should come there, you don't just trade it blindly because the zone is very big. So on the daily, I go to the 4 hour and I go to the 1 hour. Okay, so this is the whole order block. Okay, from this side to that side. So if you want to refine, you can pick the trade from here, or preferably you can wait for this inner demand zone. Okay, that gives you a lesser risk. Okay, that gives you a lesser risk. Wait for price to do whatever it to do, come and tap in. If you're a risk trader, you can just pick it out straight away, or if you want a confirmation, then you need to wait for a breakout. Okay, a breakout once price pull back, then you join the movement to the upside again. So this is my expectation on gold for this coming week. Now let's look at the next scenario. The next scenario, I have to go to the weekly back again. I mostly do everything on the higher time frame. Okay, on the higher time frame. So on the weekly, I would want to refine to this apex, okay, the very apex, okay. When you turn to the line charts, can I get something like an A chart pattern? And that is something I also teach my students. So if you're interested in learning this kind of concept, the A and V, support and resistance, advanced support and resistance, you can just reach out to me in DM, and then I'm going to teach you how to trade this correctly. So on the daily, let's see what we have. You see, that is more refined, okay, that is more refined at the same level, just a little bit above that level, but you can see that this week has mitigated it, okay, it has already mitigated it. Is the reason why I will prefer this level, okay. Now let's look at the next level on the weekly. The next level, I'm going to choose this, okay, choose this, and then also add my trend line concept to it. That is not the normal trend line like we draw, okay. So this has a whole theory on its own. There's a support, resistance, and then I'm waiting for another resistance, okay. So price would have to tap inside this trend line and then begin to sell, okay. So that is my view on gold. These are the two analysis I have on gold, but then each one first one first. Wherever price reaches, I'm going to monitor the movement and then I pick the trade. If it doesn't go well, I move to the second level, okay. So this is my anticipation for gold in the next coming week. See you in the next one. Now, if you like this breakdown I did on gold, make sure you subscribe to this account, like this video, and leave your comments in the comment section. The next pair you want me to talk about, or any other topic you want me to treat for you, make sure you leave it in the comment section. Also, you can follow me on all social media platforms, and then also you can join my Telegram community. The link is in my bio, just in the description. See you in the next one.